Hi, everyone, and welcome to today's Retail Strategy webinar. My name is Mark Zinkowitz, and I'm editor with Seed World, and I am happy to be your host. Today, we are going to talk about a very interesting topic, and that is unraveling the economic forces of 2024. We're going to hear from two experts who will talk about economic forces that affect seed growers and retailers, and what's important to know as we continue to move into 2024. I was just thinking this morning, we're only a few weeks away from the first day of spring. So that's exciting, but the year keeps rolling along, and before we know it, it will be planting season, of course. I would like to take this opportunity to thank our webinar sponsor, CCAN, Canada's seed partner, for their support. Today's webinar is being recorded and will also be made available on seedworld.com following the event. If you want to ask a question for our speakers, you can ask at any time. Greg couldn't be online with us live, unfortunately. I did pre-record my talk with him, but if you have a question for Greg, I'm happy to email it to him for you and post the answers on our website. Sam is going to be on live with us, so if you have a question for Sam, feel free to just type it into the YouTube comment box and it will be relayed to us through the system. So like I say, our two speakers today are Greg Stamp. He is Seed Sales Manager for Stamp Seeds based in Alberta, Canada. Greg is a certified crop advisor as well as being seed sales manager. And he's also a partner in Stamp Farms, which is a second generation pedigreed seed farm and seed retailer located in Enchant, Alberta. Greg's a board member with the Alberta Pulse Growers. And along with his wife, Sarah, he was recognized last year with the Outstanding Young Farmers Award for 2023. Like I said, Greg couldn't be on live today, but I will be playing some pre-recorded comments from him. And I'd like to welcome Sam Taylor to the stage. Hello, Sam. Sam Taylor is an analyst in farm inputs for Rabobank based in their New York office. Sam researches the farm input sector in North America, focusing on fertilizers, agrochemicals, seeds, and the broader farm economy. Now, Sam, you have a decade of professional experience working in the agricultural industry in both the North American and European markets. You've also been involved in agriculture throughout your whole life. You grew up in a large farming family with mixed crop, livestock, and broiler farms. You hold an undergraduate degree from the University of Manchester and a postgraduate degree in finance from Regent's University London. How are you today, Sam?
I'm very good, thanks, Mark. Thanks for having me.
Oh, well, thank you for joining us. Now, before we hear from you, Sam, like I say, I'm just going to play the first part of my chat with Greg Stamp. I wanted to find out what seed growers and retailers like him are concerned about this year in terms of economics. What kind of economic forces affect people who grow seed and sell seed? What concerns them on a daily basis, and how do they deal with that? So we'll hear from Greg quickly, and then we will switch over to you, Sam, for your presentation. But first of all, here is the first part of my chat with Greg. Thank you so much for your time today, Greg. How are you?
Great, thank you. Surviving the big snowstorm.
Yeah, you're in Alberta and I'm in Saskatoon as well. And so it's this Alberta Clipper that you've so generously given us is coming through. So thank you for that. But no,
You're
we're
welcome.
talking about economics today and how economics affect seed growers, retailers, people like you who grow seed and sell seed. This is something I wanted to talk about for a while because I've been to a number of talks lately on sort of those big economic trends. And I kind of wanted to focus in a little bit on how somebody like you is affected. I mean, there's a lot of discussion about how the world is affected by economic forces, by trade barriers, things like that. But how is a seed grower, a retailer impacted by all this? And to start off with, I thought I'd ask you, what are the main economic factors that you would say influence your seed production and sales? So when you think of, those big economic trends that you hear about in the news, how do they really affect somebody like you at that ground level?
Yeah, so I would say that say when interest rates go up a little bit, that may impact how people do prepays and things like that. So typically, see retailers are offering discounts for people that want to pay early and things like that. And if interest rates are higher, then those discounts have to either be higher or people won't do it if they're using an operating line, of course. Sometimes people are in the great situation where they don't necessarily have to have an operating line, so it makes sense to do some prepays no matter what. But that is one factor when interest rates are higher versus how it was a couple of years ago, right, with lower rates. But I would say past that, if global trends are I would say it's more related to crop types that people want to grow. So in southern Alberta, you can grow a lot of different crops. You could pick durum, you could pick a feed wheat, you could pick, just a regular CWRS. So I would say that market trends and market swings would impact us in such a big way. And the challenge is you can't really predict for that because like how much of one crop type do you grow? Last year to serve this year's market swing, it's a real challenge. I mean, we had one crop type like a hard white spring wheat in the bin for I think it had 3 birthdays. It did all go and it did sell, but we just didn't grow any for a few years, and but it's just a real niche class, right, of wheat. Whereas like durum, we're always selling durum, but our highest year we probably sold 70,000 bushels of durum when there was big fusarium issues in Western Canada, probably 8 or more years ago. And then you get years where durum sales aren't that big, like say maybe 20,000 bushels or something like that. And so how do you protect for a swing like that? It's really impossible, honestly. You got to pick somewhere in the middle and hope for the best.
Yeah, well, and for an operation like Stamp Seeds, I mean, to have the sorts of operating costs that seed growing operations and retailers have, is a huge challenge. And I'm curious when you need to access credit, when you need to access inputs, information, technical assistance for your seed business, what are the big gaps or barriers that you currently face in that right now?
Well, so we offer line of like input financing through Farm Credit Canada. So we've just got one partner that we work with basically. So some of our customers do utilize that. So we can put their seed on their Farm Credit input line. Um, it can be a little more challenging when you're a corporation. Well, it just takes more work because they have to go to their lawyer and get us make us an authorized retailer for them. Whereas if you're an individual, that can be done in-house. So if you're a corporation, which most of our customers are now, as farmers, then it just takes a little more work to get us set up. But as people are making changes to their input lines of credit or dealing with a lot of farmers do deal with Farm Credit Canada, consider your favorite seed retailer, your favorite independent seed grower retailer to add to your line of people you can get credit from through FCC. But the challenge is every company, like whether it's the multinationals, they've all got their own kind of partner line of credit. And for us, really, we don't really most of our customers are writing a check. So when they purchase seed, they're writing a check to prepay or they're writing a check at pickup or shortly after. So the independent seed grower world is a little bit challenging that way because if in reality it'd be nice if everyone had credits and you could do it that way. But to get everyone on board and to do all that together, that'd be a big challenge. But in reality, it would be really good because if you lose one customer that doesn't pay, that's a big hit that you have to build into how you price your seed, right? So it impacts everyone. because you've got to build that in, those losses that do happen, or the cost to pursue someone as well. So.
Yeah, well, and a big topic this year is costs. I mean, you hear about it everywhere in the media, how costs have gone up post-pandemic. I'm traveling this week, and it's a constant topic of how much travel costs have gone up, hotel costs, airline costs. And so when it comes to seed retailing, like how do you cope with fluctuations in things like input costs, like especially in this context now of rising interest rates, rising energy prices? How is that something that you generally plan for?
Well, it's not necessarily something you can easily plan for, but somehow you have to factor that into the cost of what you're selling. So if it costs more to run your seed cleaning plant, if your staff, the cost of living is going up, I think most employees everywhere had generally gotten some raises over the last few years. So, the cost of doing business has gone up, but then, cost of fuel, cost to price to quote freight from our farm to your farm. That there's that cost of all of those services has gone up. And I think, I don't want to get too political, but that carbon tax, I mean, how do you pass that on? Farmers can't pass it on. How do we pass that? I mean, that's impacting us and the cost of everything. Every time something moves, or every time someone touches something in the whole supply chain, that gets multiplied and amplified through the whole system. So I mean, it's in there. And honestly, if you look at anything, you just got to use scale to your advantage. So I mean, that's why you're seeing farms and seed businesses growing, is because it's the scale of business that as your costs go up, you have to do more with existing services, like the same office space, the same kind of general bin set up for shipping and retailing seed, and more through your seed cleaning plant. I mean, that's the only way you can maintain that similar margin as costs go higher. So and because you can't necessarily pass that on all the time. It's obviously you have to factor all your costs of doing business into how you price your products, but there's a limit as well.
Thank you so much, Greg, for those comments. So, Sam, I'm going to bring you to the floor now. So, Greg was talking about, some of the various factors that affect him and, excuse me, and his customers when it comes to, things like wider economic forces, credit, all these sorts of different things that affect someone like Greg on a daily basis. And this is something that you specialize in, is sort of analyzing a lot of these forces and figuring out how people in the input space, people in seed as well, are affected by these things. And hold on one second, I'm just going to put your presentation up on the screen. You have a little presentation here to sort of enlighten us about 2024, and from your perspective at Rabobank, some of these big trends that you think are coming our way this year, given the various trade situations, political forces. I mean, we'll talk about some of that during our Q&A. But I'll turn the floor over to you now, Sam, to sort of tell us about what some of these big forces are that are maybe coming our way as we begin 2024.
Brilliant. Sure. Thanks, Mark. And maybe just switch to the first slide.
Yep.
I think it's probably important to highlight just the scale of disruption that the global landscape has experienced over the last 3 years. And so when we talk about risk mitigating strategies, it's not always permissible. And I think you can afford yourself a sense of justified frustration, because what we see in this slide is we see the relative price changing indexed of an agri-commodity bundle, fertilizer bundle, and glyphosate, the most important agrochemical in the world. And what you see is a fairly mundane environment where there was a lack of volatility. And then since about August of 2020 and through till I've got on this chart 2023, you just saw some unprecedented levels of change. Fertilizer prices going up 3x, commodity prices going up 2x, glyphosate prices going up 3x. And it was just not one single factor. I mean, so you have to go back to issues such as like the big Texas freeze in February of 2021. You've got to go to countervailing duties, COVID, natural gas prices, coal shortage, environmental issues. And this is before you even get to the sanctions and the conflicts, which send these things through the roof. And I think in this kind of context and time frame, what we've become really conditioned to is a continuity of exogenous factors, black swan events, as it were, really driving the market. If you actually kind of draw this out to a more contemporaneous format, you actually see that a lot of this volatility has been taken out. But if we can move on to the next slide, Mark. Taking a longer time period, this chart really illustrates just the quantum of change that we have seen and the frequency under which we've seen that quantum of change. So this particular chart illustrates the month-over-month price changing in urea. And if you take an assumption of gross profit margins for, say, a retailer being 20 to 30% on a fertilizer. I mean, that's a kind of a ballpark range. Some are higher, some are lower. What you see in this chart is where you see those salmon colored bars, you see these periods where the price fall inside a month has been in excess notionally of that gross profit parameter. It was fairly infrequent in a period between, say, 2008 through till 2019. And then the number of times that it's happened in then has multiplied by a magnitude. And this has ostensibly turned a lot of what would be a pass-through retailer model, take your margin, pass it on, to actually the need for information up and down the value chain to be quite significant. And we actually, at the moment, we see a retail landscape where the haves and have-nots is probably slightly more broad than we would necessarily have seen in other times. And the hunt for information, the hunt for integration, the hunt for understanding what can happen with this volatility is becoming a keener topic of conversation, with those who are more resource potentially looking at investing upstream and downstream to cushion some of these blows. But this isn't necessarily an opportunity that's open to, say, independent seed growers. So the best that one can necessarily do from a risk mitigation standpoint very often is just be on the hunt for information. And I think that when we look at information, very often they fall into a few different buckets. They fall into energy pricing, which I will allude to more broadly, and politics and farm income. Can we go on to the next slide, please, Mark? And this is what I would call a affordability index of fertilizers. So this is ostensibly a bucket of fertilizers weighted against a bucket of commodities. And what you do see is you see that inside the volatility, there is a quite consistent cyclicality to it. An 18-month peak to trough kind of environment. If you look at the moving average black line, it offers a little bit more consistency across this than necessarily the month to month or the shocks. But we went through a scale of factors, as I'd illustrated, which really did fall outside the norm. And it's really a global market that we're having to look at now. So we have potash production and nitrogen production on our doorstep in the Canadian market, but that pricing is unfortunately indexed to a broader dynamic than just the local market. And in the case of potash, Brazil tends to be a material lead indicator. As a market, they are requirement of about 96% of their needs met by imports. So they saw the peaks and the troughs of these high fertilizer price markets and can be a great lead indicator. I think recently what we have seen is we've seen a deteriorating farm income in the Brazilian market, strength of imports be quite a deflator to potash prices, which has actually last week we saw an announcement of one of the big Canadian potash producers curtailing some capacity, which is very similar to what was happening in 2019. So inside all the volatility, you do see these cyclicalities of pattern, which allow you to basically get some semblance of understanding of at least the direction, if we're not necessarily permissibly able to get that kind of quantum of exactitude, that definitive price to actually look at. Next slide, please, Mark. But as I mentioned, a huge amount of this has to do with the two key factors that are front of mind at the moment, and that's the global politics dynamic, and that's also the farm income. I think if we'd gone back to, say, the tail end of last year, we were slightly more, or let's say August of last year, we were slightly more positive on the outlook for margins in North America in the 2024 season. But unfortunately, the fall in commodity prices has really far exceeded the actual fall off in input cost decline. One of the crops, one of the macronutrients that is most scarce and least affordable, and I would say that actually, if it's any consolation, it's even more unaffordable in the US market than it is necessarily in the Canadian market, is the phosphates markets. Canada tending to be a bit more of a MAP market than a DAP market. But we see a very expensive macronutrient at the same time that we do see falling farm income. Next slide, please. And a huge amount of this has to do with the geopolitical sphere that's going on at the moment. China are a key exporter of fertilizers, urea and phosphates being one, but they are one of the key catalysts or key drivers of some of the kind of inaffordabilities of macronutrients at the moment in the phosphate space. They have been reluctant to export a lot of their products because of the relative domestic affordability. So they put in some quotas to limit a lot of these exports. The current kind of affordability for growers in China is within that realm of unacceptability from central government, where they want to ensure that farmers are still producing. So we do need to see the price fall in China before we're necessarily going to see a lot of price fall in the 2024-2025 season. And we think that they're much more likely to begin an export agenda in the second half of this year once they have sated their domestic demand for phosphates. And this will obviously precipitate down onto the global market, but it fundamentally means that we've got probably no reprieve for the coming time period. And we're much more likely to see a reprieve in the relative price of phosphates in the second half of this year. So it's not necessarily in the first half of this year, the 2024 season, that we can be too particularly optimistic on this. And again, to the politics of this, Morocco are a significant exporter and producer of phosphates. And they have been functioning on a strategy to ensure margin over buying market share. And what this translates down into is a globally tighter market. And again, this portends a higher phosphate prices. And so this is all predicated on a lot of the politics, which has ultimately been a driver for a lot of the pricing dynamics in fertilizers of late. I would say that on a relative basis, imports into the Canadian market have not been too bad, but there is a relativity issue here. US affordability, US pricing for phosphates is very high at the moment. So there is never going to be a massive arbitrage opportunity there. They're going to stay in relative lockstep. And so until we see some reprieve in the global markets, we're unlikely to see some reprieve in the Canadian markets here. And it's not quite so similar, but it's similar to the bucket of issues that led to this run up in pricing and the short-term dynamic in the nitrogen sphere. We've also probably got a slightly tighter market than farm economics might necessarily portend. We should really see a lot of these pricings coming down But unfortunately, some weather issues in the nitrogen sphere have also led to slightly tighter markets in the urea market and the North American market as well. So from a projecting forward standpoint, as we see natural gas pricing coming down, coal pricing in China is down about 20% since the start of the year. These kind of cost basis is adjusting. The need to meet localized demand has created a little bit of tightness in some of these global markets, particularly the North American market. Next slide, please, actually, Mark. And so this is the relative affordability of nitrogen. And what you see is it's above the parameters of affordability relative to the kind of median and average that we have seen over the previous 10, 15 years. And I think that this, for me, is illustrative of the need for costs to come down. I mean, as I mentioned at the start, farm income is top of mind for not just yourselves, but also for a lot of the kind of input companies as well. USDA came out with their data of net farm income falling at its fastest in 18 years on a year-over-year basis for 2025. And this has really been as a result of input costs not falling at the pace that commodity prices have come. We still see a significant net short position from a lot of the funds, suggesting that there is, in their sentiment, still some downside pricing momentum in a lot of these commodity prices. I think that one of the distinguishing factors about 2024 potentially versus, say, 2019 is the compounded impact of the last few years of relatively high commodity pricing. So in the US market in particular, what we have seen is we've seen a recalcitrance of marketing, not enabled by the strength of the farmer balance sheet. So net farm income probably needs to be adjusted down for the 2023 season in expectation, and 2024 looks likely to be quite a weak margin environment as well. I was up in Saskatoon just the other day, and a couple of farmers commented to me that they anticipated that their net farm income for 2024 was probably going to be down 50% on last year. So we are facing down a potential environment of some kind of demand destruction for certain products, weakening farm income, maybe some pullbacks on some of the investments, particularly in things like machinery as well. But it will need to adjust in cost structure over the coming year. And then just onto my last slide, Mark, if I may. The energy complex is omnipresent as well. We have seen this impact the global environment quite significantly over the last few years. Natural gas in Europe has been a significant catalyst to the nitrogen complex in its volatility. You saw the price of composite coal in China sending glyphosate prices through the roof. And this is just to illustrate that there is a pretty strong correlation between some of the pesticidal pricing and the energy complex in China, China being the key export and production hub of global pesticides. Pricing's coming down for production, both in Europe on the natural gas complex for the nitrogen side. Coal pricing, as I mentioned, is down 20% in the Chinese market. Henry Hub down in the Gulf is trading at very low prices at the moment. So the cost structure is coming down. So we're starting to get a lot of these kind of indications of some price relief. It's the oversupply of nutrients in China, the cost dynamic in nitrogen pushing pricing down for the second half of this year, along with some new supply coming online down in the south and down in the Black Sea. And then we're also seeing kind of the hope that the phosphate market, the global exporters, will start to be more present in the second half of this year. But against this backdrop is a continued bearish sentiment towards the commodity prices. But I think that for the 2025 season, what we're really hoping for is that these input costs rationalize or come down a little bit quicker than they had done necessarily for the 2024 season. And with that, Mark, that was really what I wanted to touch on. Thanks.
Thank you, Sam. So, I'm not an economist, and a lot of this for me, it's like drinking through a fire hose, trying to understand all these different forces. But I think a big takeaway for me and for people like Greg and his customers is that, like the saying goes, it's complicated. Like on Facebook, sometimes in their relationship status on Facebook, people will put it's complicated. And that's kind of what I see here is that, just like, as is usually the case with economics, I mean, so many of these things, most of these forces are completely out of people's control. And that's what can be so, correct me if I'm wrong, but I think that's what can be so stressful about this for some people is that, these things are, for the most part, out of producers' control. It's not something that they have, they can't just go and change this. It's, like we can't control what China is going to
No.
do with these things. And so all these things have ripple effects that come our way that we really don't have any control over. And I imagine for you, as someone who specializes in this, you probably talk with a lot of people like Greg, people in the seed space who, it probably does cause them a lot of concern and causes people a lot of stress. But do you find yourself having to sort of, walk people through this and say, yeah, you can't control this, but like you say, your best weapon really is information and learning the most that you can about this?
Yeah, when I was up in Saskatoon the other week, it was so I come from a farming family, and I'm not allowed to provide advice on marketing or pricing dynamics to anyone, probably with the exclusion of my father, and he's never going to accept my advice anyway because I think that's the nature of the beast.
Yeah.
But what you will find is that farmers the world around are actually really willing to share information. I don't use social media in any way, shape, or form. And while there is a sense and a sentiment to glorify a lot of the hardship and frustration, I've found it enriching to engage with growers in different geographies, in different countries, particularly those which can be leading indicators, like Brazil, huge scale, very friendly, very welcoming. And if you can find a connection in the Brazilian market and get a view on the understanding, whether that's crop quality, pricing dynamics, sentiment along these, it's very interesting. Understanding what's happening in the energy complex, again, it can be a very good lead indicator. Understanding what is going to happen with Chinese politics, nearly impossible to forecast perfectly, but in my experience, they have also had a level of predictability about a lot of their actions and followed through on the policies that they intend. So you can garner information. Whether you can necessarily translate that into perfect risk mitigation, I think that a lot of the opportunities are not necessarily open to farmers by virtue of scale, but there is an ability to prepare yourself psychologically, I think, for a lot of these risks. That said, politics is also the big beast. I'm based in the US, and this year will offer its spigots of frustration and concern given the political environment that will come to fruition this year.
Yeah, and I know for those up here in Canada, it's something that people are watching. The political situation in the United States. How could that impact trade and things with Canada? And so it's all having ripple effects on us. But like you say, you were up in Manitoba recently. You're in Saskatchewan, and so you really have that benefit of working on both sides of the border and doing a lot of traveling and sort of seeing what concerns people and sort of get their take on what they think, for people not just in the United States, but here in Canada. And do you find, when you talk to people in Canada, especially, people like Greg in the seed space, that they're concerned about, what ripple effects this could maybe have over on our side of the border?
Yeah, I mean, that's certainly the case. I mean, I think that when I first got up to Manitoba a couple of weeks ago, the first conversation I had was launched into the question about what does politics look like? Well, I've lived in enough countries, and my mother's actually Canadian, but I know I've lived in enough countries to know that proffering an opinion on politics is never welcomed with a foreign accent. So I sidestepped that as a question per se, but it is important. Canada is a very important exporting country, and the kind of, as we've seen in the very recent past, can have a material impact on domestic agriculture when, as Greg mentioned, tariffs, not like kind of, or non-tariff barriers are put up to preclude the export. It can be massively deleterious. And I would understand why Canadian farmers would be apprehensive about the global political or the political environment in the US and what a kind of a change in administration might necessarily mean for Canadian farmers. I think it's just pragmatic to have those concerns and those thoughts and run scenario analysis about what it means. But I would say, Mark, that the frustrations or the concerns of farmers are very often quite localized. So if you speak to a farmer, it might be soil moisture. If you speak to another farmer in a different country, it might be input costs. It might be availability of a particular chemistry. During the early days of the Russia-Ukraine crisis, speaking to huge growers in Argentina, availability of diesel was the biggest concern. They felt that they were price takers on the inputs, but if they didn't have the availability of diesel, there was no concern for them to even necessarily buy any of the inputs. So we do see kind of quite localized concerns and frustrations as well, speaking with all the farmers globally.
I'm just going to play my the other half of my chat with Greg here before we wind up for the day. Again, to our audience, if you have a question for Sam, just type it into the comments box and it will come through on our end. I asked Greg about his concern over trade barriers, things like that, but I also got some great input from him in regards to one thing that we can control when it comes to this topic, and that is this issue of new genetics, new seed varieties that can help growers, farmers to increase yields, etc. And that's, sort of one area where maybe they do have some control is adopting new genetics to get higher yields, better disease resistance. And that's maybe one area that they can take some comfort in terms of bolstering their bottom line and trying to weather some of these economic storms. So here is the second half of my chat with Greg, and then we'll come back to you, Sam, and we'll wrap up for the day. I mentioned before I wanted to zoom in, and now sort of zooming out a little bit. When you think about trade barriers, which we hear about in the media all the time, and as somebody who, you grow seed, which you then sell to farmers, which they then grow a crop. A lot of that crop is exported, and so trade barriers are something that do impact you a lot, because it's the seed that you sell that is then grown to produce those crops that get shipped elsewhere. And are there any big, I'd be remiss if we're going to talk about economics to not talk about trade barriers. Are there any trade barriers right now that concern you, and if so, any particular reason why?
Well, just unpredictable trade is a scary thing. Like when something can change quickly and it impacts you negatively, that's scary. So like, but going the other way, so India opened the doors to yellow peas, and all of a sudden the yellow pea price jumped up, and sales for yellow peas jumped up, and everyone was excited about peas again. So that kind of opened up, but it's a short period, a short-term thing. So we don't know if they're going to extend that short shipping window for peas. So then, how do you plan to grow a crop, and at what price, and to access what markets, right? So that's a big challenge. And so if something were to get closed down, and I think the challenge is the non-tariff trade barriers. So it's those phytosanitary issues. It's those MRLs saying, oh, we found something, there's potentially it's an issue, but potentially it's just being used as a non-tariff trade barrier. So those things are the scariest in reality. But yeah, if someone's doing a special crop that's hitting just a specific market, like say a class of lentil that's only hitting a few countries as main buyers, or a yellow pea. I mean, all of a sudden, Russian peas hit China, and the Canadian pea market percentage really changed. Well, now India opened back up again, and so they're taking some Canadian peas again, and so what does that mean for pea prices this coming fall? No clue. and potential sales. You just kind of need to be in that space, but at what volume, it's really hard to say. So that would be the biggest challenge with the trade issues.
I always like to connect these issues back to new genetics and plant breeding. And how would you say new genetics really help you to mitigate some of these concerns? I mean, I know economics and new genetics are, they are linked in a lot of ways, but if you had to speculate, like, yeah, like, the latest genetics that you were growing on your farm, how they can help seed growers, retailers cope with some of these economic uncertainties? What would you say is sort of the major way that they help do that?
Well, one interesting one that I saw this past fall was I had the opportunity with Pulse Canada to travel to China, and we it was kind of a reconnection with existing customers and see how we were servicing them as a country, as farmers and industries and all that. And coming from that, I was like, man, when we sell a number two yellow pea, it's a pretty broad category. It could be high protein, low protein, anything. So how does that tie back to genetics? Well, it's like, some of these new varieties that are coming out are higher protein, maybe less split risk on certain varieties. So how could we create a special class that maybe is worth more money to these end users? And some of them it could be. And how do you say, currently, peas are just kind of sold as peas, and that's that. Well, how do you make a special class that's higher protein, less split risk? Maybe certain regions of the prairies are better for certain end customers. Like that's, I think, how we can serve our markets better and do better than other areas of the world. And then a little bit of, if there is value in what their protein fractionation or their noodle making or whatever, how does the sustainability story that Canadian farmers can tell and prove, how does that benefit them and their customers? Because I mean, some of this stuff's going back to Europe where it's more of a concern or more valued. So how does that all fit? So I think it all kind of ties together, but I would say that is one example. And then economic wise, I mean, you look at say solid stem varieties. I mean that really can make a big difference for a farmer. But I've seen solid stem varieties that, like for instance, in Durham, I've got two varieties of Durham that are both solid stem. If you're on dry land, I would sell you the one, and I would not recommend the other. The other one's great on irrigation. You don't really need the solid stem there, but it doesn't. The yield falls off when we're extremely dry. So it's like, okay, yes, both have the same trait, but there's really one I would sell you for that Southern Alberta dryland situation, Southern Saskatchewan dryland versus say irrigation in the same region, or someone in that gets maybe 60 bushel kind of Durham. Our area's definitely not been that high of a yield for a few years. So that definitely is a benefit. And so but really anytime the market changes, there's opportunities. So then there's opportunity to get new genetics into people's farms. But one crazy one is like lentils. There's a variety called CDC Proclaim. Well, a lot of Maxim lentils are still grown. It's an older variety now, but if you look at the crop insurance data from Alberta Crop at AFSC for the last really since Proclaim came to the market, whether it's been a big yielding year or a poor yielding year, they were at minimum 200 pounds an acre more yield versus Maxim. So people are farm saving and they're growing this older variety. And I could say I guarantee you'll make more money growing this new variety because I see it every time in the averages from AFSC's reported yields, and I've seen it from customer side by sides. But just it's really slow to get it through the people using new genetics. Whereas I could tell you're going to make more money growing this variety, big years, low years. But it's kind of crazy. Like just people don't see that or aren't reading information or talking to their seed suppliers early enough, or I don't know what it is, but
Yeah,
so.
well, that really speaks to the power of new genetics and how they can help with so many different things, including people like you and your customers, helping you cope with some of these uncertainties that are out there, things that we can't control, like economic conditions. And that's becoming more and more necessary now is trying as best we can to help, to help ourselves plan for these things, to help mitigate some of these things. It's not easy, but by harnessing the power of new genetics, that's one powerful tool to help us do this. I guess that could be a major takeaway from our webinar today.
Yeah. Well, and it's funny, like sometimes you get a new variety launching and that first year sales are okay. And then year two, it can be really, really big because it's caught on, and or it can be not that great because it never caught on, or the environment didn't suit that variety in that year, or something, or something changed, right? So that can be the challenge when that happens, So
Yeah, exactly. No, thank you, Greg, for your insights today. I really appreciate them. I know you've got a busy week doing some traveling, so enjoy your travels, safe travels in this blizzardy weather we've got out there, and thanks again for your time.
okay, thank you, Mark.
Yes, thank you again to Greg for that. And I suppose, Sam, before we wrap up here for the day, I suppose seed, new seed varieties, seed as an input, I suppose, is maybe a little bit of a different beast compared to, say, chemistry and things. Whereas, seed is that one input where, unlike, nitrogen, different fertilizers, I mean, they are what they are. But with seed, growers can actually pick new genetics, new varieties that could potentially help them to bolster their bottom line. And so I guess seed is maybe unique in that way, in that it maybe potentially offers growers, a little bit more control in terms of trying to mitigate the effects of some of these forces, I suppose.
Yeah, it's the least discretionary input, probably with the exclusion of diesel, you would say. Um, Growers tend to have their favorite hybrid type brand, whichever it comes in the seed. But it's also an amazing conveyance of other technologies as well, through treatments and through gene editing, through GMO traits, everything. It's a never-ending, fascinating input, and I think it'll continue to be a significant conveyance of future technologies as well.
Yeah, I think so. And it's as they say, the power of science. Science is a wonderful thing and can help us to, again, as best as possible, try and mitigate some of those other forces that come our way that we can't really control. But no, thank you so much, Sam, for your input today on these economic trends, and this has been great. This is one of the more unique webinars I think I've done, is really honing in on some of these economic forces, and it's something that we haven't really tackled too often on this webinar series, and so it's great to be able to do that. And so thank you so much for your time, Sam. Again, Sam is with Rabobank. You can find him online. Just Google his name at Rabobank, and you'll find his contact information. Feel free to reach out to him if you would like some more information on this topic. He would be happy to chat with you. Thank you so much, Sam.
Thanks, Mark.
And again, I just wanted to let everybody know that a recording of this webinar will be available to everybody in the coming hours. I would like to just take another opportunity to thank our sponsor, CCAN, Canada's largest supplier of certified seed, for their support. And again, if you would like to host your own webinar, please get in touch with us. So again, Sam, thank you so much for your time. Thank you to Greg Stamp for his time. That's a wrap on our webinar. And have a great day, everybody. Thank you for spending part of your lunch hour with us. This is Mark Zinkowitz signing off.